Okay, thank you. Good morning. It's my hope that all of us we are well. My name is Dr. Justin I.GACHIGO. I'll be your facilitator for Advanced Financial Accounting 2. I can assure you it's a very simple topic, and it's my hope that we are going to enjoy. So join me as I introduce the expected learning outcome for the first lesson. Now, by the end of this lesson, you should be able to, number one, explain the concept of value-added statement, explain the merit of a value-added statement, and prepare value-added statement. So that is what we are going to cover as our first lesson. Okay, so let us see what is a value-added statement. So I'm very sure by this time you have encountered a number of statements, and the popular statements which are known include one, statement of comprehensive income, statement of financial position, statement of changes in equity, and statement of cash flow. Then have this, which we call value-added statement, which is not very common. Okay, so what is it? A value-added statement is a financial report that provides insight into how a company creates wealth or value and distribute it among its stakeholders, such as employees, shareholders, the government, and retained earnings for future growth. It highlights the total wealth generated by an organization and how that wealth is allocated. So basically, value-added statement, it shows how the wealth is distributed. So wealth, this is the sales. The sales minus the cost of sale. So that is the wealth which we are referring to. And now this wealth, it is now distributed to various stakeholders. And these stakeholders includes the employee in terms of salaries, we have the shareholder in terms of dividend, we have government in terms of taxes, and then we have the retained earning, which is brought back for the business. Now, wealth generated, which we have referred to as value added, is calculated as the difference between the company revenue, that is sales or service, and the cost of input. These are the raw materials, goods and services brought from other organizations. Raw material, goods and services bought from other organizations. So the formula for value added is equal to sales revenue minus cost of purchased input. Then the distribution of value added, so it is distributed as follows. So this value added here is what now we are distributing. It is distributed to employee, so in terms of wages, salaries, and benefit, then to government in terms of taxes. Then to capital providers in terms of interest paid on loans and dividend to stakeholders. Then company, we have the retained earnings, which are reinvested profit for future growth and sustainability. So therefore, if I can summarize this, I can say that value added statement or value added is equals to the sales minus inputs. Inputs are the cost for everything that is brought to generate in revenue generation. For example, this is a mobile phone. So this mobile phone, if I'm doing the business of sale, so I will have to buy, and then I'll have to add a markup and sell. So the difference between the sales and the amount that I bought this phone for is what we call value added. So if I'm running a company, it means I'm going to distribute that particular value added, the difference between sales and input, to one, I'll pay my employees. If I had taken a loan, I'll pay my financials. I'll pay taxes. Then I'll have something small that I can use to maybe buy more phone so that the business can continue. Okay, let's go to the next one. So now what is the purpose? What is the purpose of value-added statement? What of value-added statement? So number one, it demonstrates wealth creation. I've just demonstrated to you how it demonstrates wealth creation. That is the sales minus the inputs, and then the second one, it highlights wealth distribution. I have just shown you how the wealth is distributed. That is sales minus the input. It is distributed among these stakeholders: employee, their paid salaries, wages, and benefits; government, their paid taxes; providers of capital, that is their paid interest and dividends. Then we have the retained earning, which is invested in the company's future growth. Then it promotes transparency and accountability. So you have seen how we have broken down the wealth generated, that the company has generated this money and this is how this money was paid out. Then it enhances corporate social reporting responsibility. This is by highlighting the company contribution to the economy and society, which is an important aspect of CSR. It shows how the company support employee, government, and the economy through its operation. The other one, evaluate stakeholder relations. That is, it reflects the company relationship with key stakeholders, allowing the organization to monitor whether it is fairly compensating its worker adequately, rewarding stakeholder, and fulfilling its obligation to the government. So if anyone is looking at that report, and when we are going to do it, you will see the percentages which are distributed to the various stakeholders. You'll appreciate that the value-added statement, it shows or it evaluates stakeholders' relationship. The other one is decision-making. For management, the VAS serve as a tool for assessing financial performance, guiding strategic decision on how to allocate resources effectively, and ensuring sustainable operation. So what are the merits of VAS? One, enhanced transparency. We have just seen how transparency is on the way the wealth created is being distributed. Then holistic view of financial performance. We have seen how it gives a broader view of how the wealth created is distributed. Then stakeholder awareness. It helps the stakeholder understand their share of wealth created by the company. Employees see how much wealth is allocated to wages and benefit, while investors and stakeholders can assess the return on their investment. Then promote social responsibility. We have just seen how it promotes social responsibility as a matter of the purpose of VAS. Then useful for employee relations. We have seen government and reporting. Yeah. So now, what are the demerits? One, the matrix. Sorry. So one, limited use of certain stakeholders. So while the VAS is helpful for employee, government, authority, and the CSR reporting, it may not be as useful for investors and creditors who are more focused on profitability, solvency, and cash flow. So it does not give a holistic view like the way we have the balance sheet. Then for potential for misinterpretation. So since the VAS emphasizes value creation and wealth distribution, it can sometimes mask poor financial performance. For example, a company might show significant value added to stakeholder, but it doesn't necessarily indicate profitability or financial stability. So the profit is not a measure of financial stability. Ignore efficiency matrix. So because of the limited focus, we don't see what is the return on investment or the return on equity, which is a limitation. The other one, limited focus on profitability. So it only focuses on profitability, but remember, the performance of a business, it's a holistic view. It's not, profitability is not the only measure of business performance. So what are the difference between income statement and value-added statement? So let us look at this aspect. Focus on reporting. So income statement, it shows profit available to shareholder after expense, interest, and tax. But now the value-added statement, this one just show wealth created and how it is distributed among stakeholders. The treatment of stakeholders, employee wages, taxes, and interest are treated as expense, but in the VAS, employees, government, and providers of capital are treated as a participant in sharing the value added. Let us look at the objective. Income statement objective, it is to measure profitability and financial performance for the owner and shareholder. For VAS, the objective is to demonstrate social accountability by showing wealth distribution to stakeholders. Depreciation, here it is deducted as an expense to arrive at a net profit. In VAS, it is deducted to arrive at net value, added or treated as value retained for business. So this statement, you are going to see practically what it means. So let us now see how we can prepare the VAS. Preparation of the VAS. So the value added statement can be, sorry, I don't know why this line is moving. So value added statement can be classified into two major parts. So this is the first part. The first part, it shows the computation of value added figure, which can be either the gross value added or net value added. So again, I'm going to show you or demonstrate in the next slide this part. So the first part is just the computation of either gross value added or net value added. Now, let us look at the distinction between the gross value added and net value added. So the distinction between the two is how we treat the depreciation. So the first one, for the gross value added, the depreciation is part of the business expense and not input cost. So GVA is equal to output minus input. So that is so now this one, it shows that the depreciation is not a part of input cost. Yeah. Then we have the second one. Now for the net value added, here we deduct depreciation. We deduct the depreciation. So we get the NVA as output minus input minus depreciation. Input here is the sales. These are the sales. And input, these are the purchases plus the supplies like utilities, water, electricity, etc. So in summary, net value added is equals to gross value added minus depreciation. An example, a company produce good worth Kenya shillings 1 million in a year. Input cost, these are raw materials, utilities, services, etc. is 600,000. Depreciation is 50,000. So you are required 1 GVA, 2 NVA. So GVA we have said is equals to output minus input plus depreciation. We may add the word add depreciation here. It means that the depreciation may form part of the input cost. So GVA will be 1 million minus 600,000 plus 50, which will be 450. Then we have NVA, which will be output minus input cost minus depreciation, which will be 350. Basically, it is we have said NVA is equal to GVA minus depreciation. So this is the GVA, which is 450, then minus depreciation, which is 50 here, you get 350. Now, the second part, this is the second part. The second part, it shows how the either GVA or NVA is distributed. So how is it distributed to employees? How is it distributed to government? How is it distributed to providers of capital? And how is it distributed to the company retained earnings? So let's see. Now this is a template of how we compute GVA and NVA and how the amount is distributed. Now we start this is the first part that we have just shown you here up to this point here. This is the first part. And we have said that gross value added, it is sales. So we are going to have the sales, add any other income to get the total revenue. Then less input cost. So input cost, it includes the cost of raw materials and good purchased. And also it also includes utilities and other external services. Add these two, get the gross value added. So we have said the gross value added, it is input minus output to get this figure here. Then, if you want to get the NVA, again, you raise the depreciation. Remember, we have said NVA, this one, is equals to GVA minus depreciation to get this NVA. So get the NVA. So then this NVA is one which is now distributed. Yeah. So the distribution which will be given in a question, it is done to employee, it is done to taxes, it is done to providers of capital, retained earning. Now, there's something I want you to get. Now, in an exam question, if, for example, you are told to prepare value added statement, yeah, and show distribution using one, gross value added statement, two, net value added statement. For the GVA, what you are going to do is that the depreciation in the GVA is normally part of the distribution here. So in GVA, you are going to have the figure for depreciation in the distribution section. But for the NVA, you are going to have the depreciation as part of in part A. So GVA depreciation is going to be in part B. NVA depreciation is going to be in part A. So please get that very clearly because most of the students, they do confuse that statement. Okay. So let us now do a simple question here. The information below relates to Young General Limited, a company listed on Nairobi Stock Exchange for the year ended 30th June 2023. So we have purchase of raw materials, we have turnover, we have salaries and wages, we have taxation for the year, we have dividends, we have depreciation, we have water power and insurance, then we have finance charge. Then you are required, using two alternative approach to the treatment of depreciation, prepare value added statement for the year ended 30th June 2023. It is my hope that all of us are smiling because I have just demonstrated to you that for GVA, when you are using the gross value added statement, the depreciation is in part B. When you're using NVA, depreciation is in part A. So let's see a sample working. So now this is alternative one. When we have depreciation is applied for business for maintenance. So what you are going to do, you just come here, the way we have just said, take the turnover as per the question, take the purchase of raw material as per the question, water, flour, and insurance, these are the external costs, get the totals of this one, then get the gross value added as this, and this is 100%. This amount is 100%. Now, remember, this amount is the one that now we are distributing, and this amount should be equal. And meaning they are equal after you have now done, let's say, applied as follows. So you have paid the salaries, you have paid the dividends, you have paid finance charge, you have paid taxation. Then to the business, you are going to have the depreciation, which is also given in the question. And then the balancing figure, if you add all this, the balancing figure is the one that you key in here as retained earning. And therefore, the gross value added and the amount distributed are the same. Now, to get these percentages, so the gross value added figure here, which is 100%, we have said this is the figure that is being distributed. Yeah. So what you need to do is you take this figure here, this 6,800 divided by this to get 52%. Get 1486 divided by 12,960 to get 11.58%. Get 2040 divided by this to get this. Get 2580 divided by this to get 20%. And when you sum all this, they should give you 100%. And if you don't get 100%, it means you have made some errors. So now let us use the alternative 2. So in the alternative 2, look at the deposition where it is. Look at alternative 1 where the deposition is. This is where the deposition is in alternative 1 for the gross value added. But for the second one, it is here. That's a key difference. So I hope that you have noted that. So you do the same turnover, purchase of raw materials, then deposition you added here, water, power, and insurance. Then get the net value added here. Remember, the first one is gross value added. So the second one is the net value added here. This 11,560 and this 100%. So this amount is one that you are going to distribute. Then you do the same distribution: salaries, dividends, finance charge, taxation to business. You get the retained earning. So and I hope you can see the retained earning. It's different from the first one, and even the amount distributed is very different. So again, you get these percentages by taking 68 divided by 11,560, 1486 divided by this, 2040 divided by this, 1234 divided by this, and this one should give you 100%. So it is as simple as that. So in most cases, you find that being given this question, the first one you are given to start with the GVA, then you get the NVA. So if you get GVA wrong, even the NVA, you're not going to get it right. So it's as simple as that. A second question. The following balances were extracted from the books of Cortex Limited for the year ended 30th September 2023. Purchase of equipment, purchase of raw materials, depreciation, interest expense, investment income, closing stock of raw materials, minority interest in the profit, ordinary dividends, value-added tax, wages and salaries, and hot, then corporate tax. So you are required, one, GVA and NVA showing the distribution in each alternative. The second one, you are required the income statement. So again, this is very simple. The GVA, that is alternative 1. And remember here, I have just done some shortcuts here. Always remember to have this caption here. Like I'm expecting you to indicate there, the Cortex Limited, value under the statement for the year ended this. So that is the caption that should be here. So here again, we start with the turnover, add other operating income that you have been given in the question, get the total revenue. Then let's input. The input here we have purchases minus closing cost. You get that figure there. So we have not been given any figure for utilities and other external services. Then you get the gross value. This is now the gross value added here. This is the figure that you get here. Then how is this amount going to be distributed? To employee, that amount there. To government, you combine VAT and CIT to get that. Interest expense. So to providers of capital, you combine interest, dividend, and minority profit. You get that there. Depreciation. Remember, we have said for GVA, depreciation is in this part B here. You bring it here. Then we have the retained earnings. It is the balancing figure between the sum of all this minus this. You get that figure there. Then you get the percentages of distribution. Here, I forgot to indicate this is a 100%. Yeah, like that. So this 100%. So this figure here and this figure should be equal. Then get these percentages. 5,000 divided by this, you get that 0.8%. This figure you divide by that, you get that. This divided by this, you get that. This divided by that, you get that. And finally, this divided by this, you get that. So, and this is what we are talking about, that the VAS shows fair distribution. So employee can see how percentage goes to them. After generating the wealth, 30.8 goes to employee. Government takes the largest share. Wow. Yeah. Is it yeah, yes. Providers of capital take 5%. You see, so and in this case, employee um, cannot be agitated because they are also getting a good fair share there. Then the second alternative is the NVA. For NVA, remember we said that the difference between NVA and GVA is that you less the depreciation. So first of all, you get a GVA. The GVA is as the previous question, this 16 or 90. Then just less depreciation there. Get the amount that you are going to distribute. This is the NVA. Again, this is 100%. And this is the amount that you are going to distribute. How are we going to distribute? Then you can see to employee, to government, to providers of capital, to retained earning, which is the same as the other one. But for now, this distribution is the same as the other one. So this retained income here, it is now the difference between 15 and the addition of this. You get this one as a balancing figure. Then get the percentages. 5,000 divided by that divided by that divided by that divided by that. But you can get these figures there. Okay. So then the last one is where you need to prepare the income statement. So this is just the normal income statement that all of us we know. So first of all, we have the turnover. Remember, for turnover, you should less the VAT, so that you can get the amount before VAT. Then the cost of sale, purchase of raw material, you less closing stock, you get the cost of goods sold there. Then the gross profit, you get that one there. Then add the income investment so that you can get the total income there. Then less all these expenses, yeah, including tax, so that you can get the retained earning of this amount here. So now, I would want us just to test your understanding, and this is how the question will come. This question actually is the typical question which will come in the exam. So I would want us to do this one as an assignment, just to assess whether we have understood this topic. And once all of us have been able to do this, then we'll say comfortably that we have achieved the objective of this class. Otherwise, if we are stuck, I'm still available to guide you further. Maybe we can even set up a Teams meeting for enhancement of our understanding. Thank you and have a good day.